Well, with that, let's move on to our next guest. We have Nilesh.
Nilesh has just joined
Nilesh
us.
is just going to join us in a bit. But now that's not bad. I think the question is whether this lasts. The whole problem is that the market completely fizzles out because we get this FPI selling through the course of the day. Now, let's see. Whether
It's just possible that because it's a Friday, people may not want to go home with too many short positions. That could be one reason.
Yeah.
And, like I said, when shares and the rupee fall enough, at that point in time, the FPI selling also ends. Because, either there's no point or you're expecting that, you better wait for better levels to sell. So it's quite possible that the combo of fall is leading to a trigger point of end of sales and beginning of purchases. Let's hope that my interpretation is correct. But let's defer to the expert, and he's joining us now. Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company, is with us. Nilesh, I'm itching to ask you about the markets. But first, I'm sure you have memories. You perhaps were not in the market in 1991. You don't look that old. But memories, what did he mean from a capital market perspective, Dr. Manmohan Singh?
See, for all the people of our generation, he was the person who gave wings to our dreams.
Yes.
Prior to our generation, opportunity was study in India, go abroad for opportunity. But when the economic liberalization was launched, we were passing through phases where we had to pledge gold to raise foreign exchange loan. And the whole market and economy was looking up. I'm glad that I became part of a tribe which stayed back in India. And thanks to the liberalization and reforms launched by Dr. Manmohan Singh, all of us have enjoyed today's India. So our generation owe eternal debt to Dr. Manmohan Singh.
No, I take your point. I think it was Chidambaram who tweeted saying that he created the middle class as we now know it. And I think that's what Nilesh is referring to. Okay, Nilesh, we have been getting tributes through the day, but now we have a market to trade. So we want to ask you, you heard that deal in the cement space? Ultratech just buying 8.7% in Star Cement. What is the sense? Cement was not the most favored sector, obviously one of the downbeat sectors of 2024. You think it's time to give it a look for reasons other than just building homes?
Undoubtedly, it is one of the cheapest commodity in India, and it can be imported. And apart from homes, there is also infrastructure need for cement. There is a consolidation happening which will bring economies of scale, which will improve efficiency, and which will also bring some amount of price stabilization. We believe cement sector is a probably better sector to play building material space, especially at current valuation.
Okay. Nilesh, hi, good morning. Great to have you on the show today. And what a year it's been, right? So much of news flow and so much of action in the market. But I think the hallmark for me has been the fact, since I track personal finance as well, has been that number. I was compiling figures for the end of the year. And this year, the equity category is the one where investors have piled up the maximum amount of money in mutual funds. I think about 3.5 lakh crores. This is as of November data, so maybe December figures would look even better. But Nilesh, that's the biggest question. We can look at all the cues of what will happen to tariffs and, what happens to the exchange rate and what happens to interest rates. All of that is fine at a macro level. At the end of the day, it boils down to how much is money is coming in and how much is going out in the market, right? And that's where the resilience of the domestic retail investor has been the biggest story of 2024. Do you see that continuing in 2025, even if the market remains range-bound, sideways, or maybe corrects more?
So undoubtedly, yes. Partly, it is all credit to the mutual fund distributors who have gone and explained financial planning to investors. Partly, it is due to friends in media like you, Surabhi and Latha, who have always explained about long-term investing to investors. And on a bad day when markets are crashing, you have given confidence to investors that they need to remain invested for long-term. Part credit also goes to regulator like SEBI, which has created boundaries within which mutual fund industry is operating and which gives them trust and confidence of investors. Part credit should go to manufacturers like us who have toiled for decades to build that trust and confidence. And now we are getting wind in our sail as our happy customers give us word of mouth publicity. And at the end of the day, what money we have received between FY21 and FY23, mutual funds got less money than what people invested in currency note, which is a depreciating asset. Come to 2024, what we have got is less than 10% of financial savings of investors. Forget the total savings. So there is a long journey ahead. Decades back, we used to say one day there will be retail tsunami. Now we are saying that this is just the beginning. This is just the trailer. Picture abhi baki hai mere dost.
No, absolutely, Nilesh. No taking away from the long-term structural change that has that's kind of been unleashed on the market, the financialization of savings and the realization that you can make long-term wealth by being in the equity market. But I'm asking from a near-term perspective, because you've seen so many cycles, as the patience of the investor gets tested over the next few months, if the market remains volatile or sideways, do you see flows remaining as strong? I mean, for instance, December, what are the trends that you are seeing?
See, December is generally a slower month because of holiday season and vacation. And despite that, flows have remained strong. I think the responsibility is on us, the mutual funds, the distributor community, and the media to keep investors informed that they will have to moderate return expectation. In the past, we used to get punished if we delivered negative return. This time, my worry is not negative return, it is below expectation return. Last 5 years have spoiled habits of investors. Everyone is looking at 25-30% return per annum compounded. The actual returns will be far, far lower than that. So as long as we can do the expectation management of investors, I think flows will continue. Will there be some exceptions to the rule? Undoubtedly, yes. We are not a homogeneous market, but majority of Indian investors have become matured enough, but we have a role to play in managing their expectations.
Okay, well, let me get to some brass tacks, Nilesh. The sector of 2024 actually has been pharma, quite unexpectedly. And of course, the EMS, the e-commerce sectors have also done very well. Would you see these themes running through 2025 as well, or will they be new themes?
From a business point of view, Latha, they will continue to do well. In the new age platform, winner takes it all. The number one player's margin will be 50-60%. Number two will be 30-40%, and number three will be loss-making. So anyone who is becoming a winner in new age digital platform business, they will continue to do well. In terms of EMS business point of view, undoubtedly they will continue to do well. China plus one is happening. Our companies are entering into joint ventures. They are getting now components. It's evolving an ecosystem just like what Maruti Suzuki did with automobile and auto component. So business point of view, there's no doubt in my mind that in pharma, in EMS, and in new age, business will continue to grow. The real question comes from a valuation point of view. Are we discounting too many things? And I believe there will be cycle in some of these companies, not all the companies, but some of these companies in these sectors, market is expecting too many things, and there might be some disappointment. The disappointment could be one quarter's earning getting deferred over 2-3 quarters, that's it. So long-term investors will still continue to hold their stocks. There will be obviously some trading opportunity based on how this company is delivered versus expectations.
So as a follow-up, Nilesh, let me ask you this. For 2025, do you see the same themes, continuing to run up, maybe with some corrections here and there and some, patchy returns along the way, which would be, say, sectors like EMS, manufacturing, PSU, CapEx? Do you see the same, horses running? Or will this be a year of churn where you go back to, say, banks that have underperformed, go back to consumer stocks that no one wants to buy right now, or maybe cement? I mean, we discussed that at the start itself. So is it going to be a year of churn and sector rotation, or will it continue to be the leaders of 24 that shine in 25 as well?
So at least we are positioning at Kotak Mutual Fund for churn. Okay. We have moved from expensive valuation to reasonable valuation. and maybe this is like khatte angur, but we will stick our neck, that valuation becomes the driver for your future return. We believe in banking sector, those banks where credit culture is good and who don't have overexposure to microfinance, personal loan, and unsecured lending should start outperforming the market over a period of time. In consumer staple, companies which have exposure to rural India should start outperforming as bumper Kharif and Rabi crop starts putting an impact into the rural consumer's pocket. We also believe pharma and IT kind of sectors will continue to do well as valuations are reasonable. On industrial side, we are very, very selective and we are booking profit in many of our counters. Capex, defense, these are themes, but their market is expecting too many things and there may be a year of consolidation ahead. And mind you, this is all going to come in a phase where returns are going to significantly narrow between large, mid, and small, as well as compared to what last 5 years have delivered. So sector rotation, stock rotation will become key as we are all fighting to get that low double-digit, high single-digit returns.
Okay, point taken.
All
Nilesh.
right, Nilesh, thank you very much. It's been an absolute pleasure listening to you, not just today, through the year. And we wish you a fantastic end to 2024 and even more brighter and buoyant 2025. Thank you so much for all the conversations. And, we wish you all the very best to you and your team at Kotak Mutual Fund for the new year.
Thank you, Surabhi.